you will see that we have a clear refinement inside of this 15-minute zone, this bigger zone. We have a smaller 5-minute candle, this one, and the inefficient push and the breakout structure and liquidity sweep started from this candle. So this will be our perfect refinement. As you can see, we can refine this candle for this downside candle, and I will just type the 15-minute flip zone 5-minute refine. Okay, let's see the next zone. The zone below this one is this zone. As you can see, inside of this 15-minute zone, we also have a clear 5-minute demand zone, this downside candle, because the inefficient push and the breakout structure and the liquidity sweep start from this candle. So as you can see, huge inefficient push to the upside. Here's the breakout structure. Again, here's the liquidity sweep because there's double taps. So we have a clear refinement again. We can just use this candle as our 5-minute refinement. I will just type 5-minute refine again here. And that's it. Let's see the next zone. So this will be our next zone. And as you can see, inside of this 15-minute POI, 15-minute demand zone, we have inefficiency again because inefficient push started from this candle, from this upside candle. As you can see, here's inefficiency because the wicks between the candles doesn't meet in the middle. So we can use this candle as our 5-minute refinement. It also broke structure. This was the candle that started the whole order flow that broke structure here. And yeah, it actually swept some liquidity from this region, but it is not as valuable as the 15-minute flip zone here. So this one, but we can still refine it. Okay, let's see the next one. As you can see, I will just zoom out first. So these are the refines that we just did recently. I will just type 5-minute refine again here. And as you can see, this is the last 15-minute zone that we have to refine. And inside of this zone, we will have a clear zone again. So the inefficient push started from maybe this small candle. As you can see, the wicks doesn't meet in the middle. So the inefficient push started from this candle, and the breakout structure and the liquidity sweep also started from this candle because here's the double tap, here's the breakout structure. But if you don't want to use this small candle, you can just simply use the bigger candle like this, because the taps are almost equal and the inefficient push started from these taps. So if you don't want to use this small zone, so this small zone, you can just simply use the bigger one. Okay, so the next one, this big zone, is the 4-hour zone. And actually, if you want to refine this 4-hour zone, you can refine it on the 15-minute chart. I usually just leave my 4-hour zones the way they are. So I don't really refine them. But if I take a closer look, you will see that inside of this 4-hour zone, we will have, for example, this 15-minute zone for a refinement because the inefficient push started from this candle, and also it changed character here. So yeah, I will just keep it like this. I won't refine it, but if you would like to refine the 4-hour zones on the 15-minute charts, you can of course do that. So yeah, let's switch back to the 5-minute chart. So these are our refinements. These are all the 5-minute refinements. And the next step, actually you can mark more 5-minute zones out on the 5-minute chart that weren't appear on the 15-minute chart. So if I like to, I can mark 5-minute zones out. For example, here's a clear zone. As you can see, this zone is clear because it started an efficient push here and swept these double taps and broke structure here. So actually I can just mark this 5-minute zone out if I'd like to. And it also has liquidity just above it. So here are liquidity. As you can see, this upside candle created a small pullback here and created the first bottom. And this pullback created the second bottom. So this zone has liquidity. But if price reverses, I believe, after the liquidity sweep, so price reverses, it will hit the 15-minute flip zone, because this flip zone has so much power. It flipped the 15-minute supply zone. So I believe if we enter in shorts, we will target this 15-minute, this 15-minute flip zone. So yeah, actually you can mark out more 5-minute zones if you'd like to, but in this case, I find it unnecessary. So let's just skip this part and jump to the next point. Okay, so let's do the next step. As you can see, it switched to the 1 minute chart and mark up any potential 1 minute zones that could lead to the 5 minute zones. Okay, so basically we are waiting for, sorry, I just replay the price. Okay, so basically we are waiting for the liquidity sweep from above this region. So as you may know, there are four equal taps on the 4-hour chart, on the 15-minute chart, on any chart. So there's huge liquidity on this line. So basically we are waiting for the sweep of this liquidity on the 1 minute chart. And after the 1 minute chart sweep, we will wait for a 1 minute change of character to the downside. And after the change of character to the downside, which will happen somewhere around here, after the change of character to the downside, we will have a supply zone that change character. And after a supply zone that change character, we will look for a short opportunity on that supply zone, and we will target the next unmitigated demand zone, which will be this one in this case, because this is a really, really strong 15-minute flip zone that I just talked about. So once again, 1 minute change of character and liquidity sweep happens after a supply zone will be formed, enter on that supply zone and target the next unmitigated zone. Okay, but actually, why are we waiting for short opportunities? Let me just talk through this again, switch to the 4-hour chart. And as you can see on the 4-hour chart, the trend is extremely bearish, right? So as you can see, the movements on the 4-hour chart are bearish movements. The main movements are bearish movements. All of the downside movements are huge, inefficient, high volume movements, breaking structures and sweeping liquidities, inefficient movements. And all of the upside movements are just small pullbacks with no inefficiency, no volume. So as you can see, all of the downside movements are huge inefficient movements. All of the upside movements are small pullbacks, downside movement, huge inefficient movements. And this is our pattern right here. We are looking for short opportunities. And on the 15-minute chart and the 4-hour chart, we have a huge liquidity line just above the 4-hour supply zone. And this will be the perfect opportunity for the short entries. Price will sweep this liquidity, and after the sweep, it will create a change of character and happen a trade. This is our perfect pattern here. Okay, so let's just switch to the 1 minute chart and actually play price forward. We are waiting for the 1 minute sweep, waiting for the sweep on the 1 minute chart. On the 15-minute chart, it will look like just one big candle that sweeps the liquidity with the wick, and after it will reverse, but we can catch a good anti-opportunity on the 1 minute chart. So this is the liquidity line right here. Let's wait for the sweep. Okay, small pullback. And actually the sweep happened, as you can see. And this was the last demand zone that created the sweep and the breakout structure to the upside. Let's play price forward. Price swept this liquidity line, as you can see. That's what happens next. And as you can see, price broke through the last demand zone that created the liquidity sweep and the breakout structure to the upside on a 1 minute. And price swept all of the liquidity from above this line, swept the trillions and trillions and trillions of dollars from above this line, from above the supply zone. And after the liquidity sweep, it reversed immediately, as you can see, with huge inefficient move to the downside and broke through the last demand zone. And actually it broke through several demand zones because we had this demand zone right here. So yeah, this means a demand zone has been broken. This means we have a supply zone. Sorry, the recording stopped suddenly. I don't know why, so let's just continue. So as you can see, this demand has been broken. So it means a supply zone will be automatically formed, because if a zone breaks, an opposite sign zone will be formed. Okay, so here's a change of character. As you can see, price change character here because it broke through the last structural low point. And this was a strong low point, as you can see, because it created the last high point and swept liquidity from this region. So price just broke through this demand zone. Okay, let's find the supply zone that caused the break of this demand zone. As you can see, here's an inefficient push that came into the market. Here's the liquidity sweep from this region. Here's the change of character. So which supply zone caused this change of character, inefficient push, and liquidity sweep? This upside candle has been already mitigated by the following candle, right? But the following candle is already inefficient. So this is all inefficient. So in this case, as I told you, we have to use the wick as our right zone, because this candle is mitigated by the following candle. So the wick is the only unmitigated area. Okay, so I will just mark it out as our supply zone, and I will set my order limit on this zone, a sell limit, and I will set a 2 pip